Today we're diving into the real estate market in British Columbia, which has kicked off 2025 on a promising note. According to a statement from the British Columbia Real Estate Association, residential sales in January saw a 6.4% increase compared to the same month last year, totaling 4,221 sales. However, it's important to note that despite this uptick, sales were still 12% below the 10-year average. This suggests that while there's growth, the market hasn't fully bounced back to its long-term trends. Brendan Ogmundson, the chief economist for the association, provided some insights into these numbers. He mentioned that the rise in both sales and listings could indicate a stronger year ahead for the real estate market. However, he also pointed out that global uncertainties could potentially impact interest rates set by the Bank of Canada, which in turn could affect the market dynamics. It's a reminder of how interconnected our local markets are with global economic conditions. The data also revealed a significant increase in active listings, which jumped by 27% to nearly 31,000. This growth in listings is seen as a normalization of trends, as more homes are being placed on the market. The association emphasized that it's crucial for supply to keep up with demand in order to maintain balanced markets and avoid any sharp increases in prices. Interestingly, while sales have increased, the average residential price on the multiple listing service in British Columbia decreased slightly by about 1%. Last month, the average price was $949,560, down from $959,191 in January of last year. This slight decline in prices could be a reflection of the increased supply or other market factors at play. Breaking it down by region, the average sale prices varied. Northern British Columbia saw a 3.4% increase, reaching $396,187. Chilliwack and Greater Vancouver experienced decreases of 3.7%, with prices at $694,700 and $1,208,415, respectively. On the other hand, regions like Okanagan and Kootenay saw price increases, with Okanagan up 2.7% to $736,479 and Kootenay up 9% to $505,729. Notably, Vancouver Island experienced an 11.4% increase, with average prices hitting $722,305, and Victoria saw a 5.3% rise to $986,258. The South Peace River area stood out with a remarkable 30.5% increase, bringing the average price to $281,028. So, what does all this mean for potential buyers and sellers? It's clear that the British Columbia real estate market is experiencing some shifts, with increased activity and a more substantial inventory of homes available. While the average prices have seen some variation across regions, the overall trend points to a more dynamic and possibly competitive market as we move further into 2025. As always, staying informed about these trends will be key for anyone looking to buy or sell in the near future. In recent years, mortgage brokers have faced an overwhelming influx of new mortgage technology, each promising to revolutionize the industry. However, many brokers find themselves feeling frustrated and overwhelmed by these new tools. Despite the promise of enhanced efficiency, many brokers continue to rely on traditional methods like email and Excel, which remain surprisingly competitive. This begs the question, why is this the case? Tom Hall, a prominent figure in mortgage technology and the founder of Blue Mortgage, provides some insight into this issue. He uses the analogy of magic beans to simplify the investment in technology. Essentially, brokers need to invest these magic beans, representing time, money, and expertise, into new technology with the expectation of a return on investment. Traditional tools like email and Excel require minimal investment, but offer substantial returns, making them hard to replace. On the other hand, newer technologies in the mortgage industry, such as Philogix, Finmo, BOSS, Scarlet, and Velocity, as well as services like Blue Mortgage, Calendly, and Zapier, require a greater investment of magic beans. While they offer a positive return on investment, the upfront investment can be a barrier for many brokers. Hall points out that brokers often end up investing insufficient resources, leading to abandonment of the technology and frustration. Hall suggests that the solution lies in brokers gaining more expertise in technology, which can increase their stockpile of magic beans without depleting it. For technology leaders, simplifying the onboarding process and identifying quick wins can lower the initial investment required. Both brokers and tech leaders should avoid bad investments and ensure that the technology meets the broker's readiness and capacity. Interestingly, Hall believes that artificial intelligence could dramatically change the landscape. Unlike current technologies, AI has the potential to offer a significantly higher return on investment, potentially flipping the current dynamic. Brokers not adopting AI could find themselves at a disadvantage. Hall advises brokers to prepare for this shift by gaining expertise and making smart, positive return on investment decisions now. In a significant development for the financial services sector, Equifax UK has formed a partnership with digital identity provider OneID to introduce an innovative solution aimed at streamlining customer onboarding. This collaboration integrates Equifax's Apply Plus with OneID's advanced digital identity verification system, creating a seamless and document-free process for customer identity verification. The aim is to address the ongoing challenge of application abandonment in credit journeys, which can often be attributed to cumbersome verification processes. By leveraging open banking technology and existing bank account data, the new solution empowers customers to verify their identities without the need for traditional identification documents like passports or driver's licenses. This approach not only enhances security and efficiency, but also significantly reduces the time required for application processing, thereby improving the customer experience. According to reports, this streamlined process has led to a 90% conversion rate in some cases, with onboarding times reduced to as little as 30 seconds. The need for such a solution is underscored by research indicating that 68% of consumers abandon financial applications, with 21% citing lengthy processes as the primary reason. Additionally, nearly one-third of UK consumers would abandon an application if required to take actions outside of their preferred channel. By pre-filling application forms with bank-verified information, Apply Plus minimizes these hurdles, making the process quicker and more user-friendly. Craig Tebbett, the Chief Strategy and Innovation Officer at Equifax UK, emphasized the importance of this new technology, stating that application abandonment is a persistent issue in the lending industry. He highlighted that Apply Plus offers a streamlined and secure onboarding process that not only enhances operational efficiency for clients, but also strengthens consumer trust in digital identity verification. This is achieved by reducing reliance on manual document checks and leveraging open banking to decrease friction in the onboarding process. Paula Sussex, Chief Executive Officer at OneID, echoed these sentiments, noting that the integration of Apply Plus with OneID's technology provides a transformative solution for both lenders and consumers. This integration supports consumers in their credit application journeys, enabling safe and secure access to financial products with minimal friction. The collaboration has been recognized within the industry, with Equifax UK and OneID winning Best Industry Partnership and Equifax receiving the Best Sector Initiative Award for Apply Plus at the 2024 Open Banking Expo Awards. In a significant move to tackle the housing crisis, the Government of Canada, in partnership with the municipality of Hautes-Terres, has announced an agreement to expedite the construction of 63 homes over the next 3 years. This initiative is part of the second round of the Housing Accelerator Fund, which aims to eliminate barriers to building much-needed housing more quickly. This agreement will allocate over $2.3 million to the municipality, supporting local efforts to update zoning bylaws, allow for greater housing density, and introduce financial incentives for affordable housing. The municipality's action plan includes converting non-residential buildings into housing units, infill development, and making municipal land available for housing construction. The Housing Accelerator Fund, launched in March 2023, is a $4.4 billion initiative by the Canadian government aimed at fast-tracking at least 112,000 new homes by 2028. The fund requires local governments to submit action plans to unlock funding, with subsequent payments tied to delivering results. The goal is to encourage bold local initiatives that increase housing density and speed up project timelines. The Honorable Nathaniel Erskine Smith, Minister of Housing, Infrastructure and Communities, emphasized the government's commitment to removing barriers and cutting red tape to facilitate housing development. He highlighted the partnerships with New Brunswick communities as a means to achieve this goal. Serge Cormier, Member of Parliament for Acadie-Bathurst, expressed optimism about the impact of this investment, noting that it supports vital local initiatives like updating zoning regulations and providing financial incentives. These measures aim to ensure that more families and workers can find affordable housing in Hautes-Terres. Denny Landry, Mayor of Hautes-Terres, highlighted that this funding aligns with the municipality's strategic vision for equitable housing access. The funding will help create an environment where individuals, including those with reduced mobility and families, can thrive, and businesses can prosper by guaranteeing housing for employees. With the federal government committing substantial funds to support housing initiatives, this partnership in Hautes-Terres is a step towards making housing more affordable and accessible. The Housing Accelerator Fund is a component of Canada's National Housing Strategy, reflecting the most ambitious federal housing plan in over 40 years. That wraps up our segment on the housing initiatives in Hautes-Terres. It's encouraging to see efforts being made to address the housing challenges in Canada, and we look forward to seeing their impact in the coming years.